Welcome to the Daily Block, the top events that actually moved crypto in the last 24 hours and why they matter. Fast, snarky, and painful, like a margin call with confetti. Evernorth plans to go public as XRPN, targets raising over $1.0 billion to build the largest public XRP treasury. Evernorth, backed by Ripple, SBI, Pantera, Kraken, and a few big friends, agreed to merge with SPAC Armada 2 and aims to list on NASDAQ under the ticker XRPN. The plan, raise north of $1.0 billion to buy XRP aggressively and run an active treasury that lends, provides liquidity, runs validators, and deploys DeFi yield strategies. Leadership leans on ex-Ripple exec Ashish Birla and Ripple insiders as strategic advisors. The deal expects to close in the first quarter of 2026, pending approvals. This is not an ETF, it's a corporate treasury vehicle promising active management to grow XRP per share over time. Why it matters for crypto investing. A NASDAQ-listed public XRP accumulator at scale could suck up available supply, create institutional demand, and give retail traders a liquid, regulated proxy to get XRP exposure without managing cold wallets. Risk. Regulatory or SPAC delays could torpedo the flow and leave XRPN share price volatility. All right, sliding into Bitcoin news now. Bitcoin reclaims $110,000. Analysts eye a breakout toward $115,000 to $120,000. BTC bounced back above $110,000 on heavier volumes after a messy sell-off. Traders are watching the resistance zone around $115,000 to $116,000. A sustained break there could open a runway toward $120,000, while structure shows accumulation around the 200-day moving average and hedged leverage positioning across exchanges. Macro liquidity and Fed rate narratives still hang over the market, so if support at $110,000 fails, look out below for quick deleveraging. Why it matters for crypto investing. Bitcoin sets the market tone. A confirmed breakout sends liquidity into alts and forces leveraged shorts to get wrecked. Failure at resistance can cascade liquidations. Risk. Volatile whipsaws and macro shocks make timing and stop sizing crucial. Next up, TradFi creeping further into crypto. BlackRock lists iShares Bitcoin ETPs on the London Stock Exchange after the UK softens ETN rules. BlackRock launched an iShares Bitcoin ETP on the LSE after the UK regulator eased its ETN ban and made room for crypto ETPs, letting retail investors buy BTC exposure in regular brokerage accounts with small fractional units. The move follows the FCA permitting tokenized fund structures and signals more mainstream on-ramps in Europe. This is the slow, steady TradFi drip that pulls lazy capital into Bitcoin without people having to actually touch chains or learn seed phrases. Why it matters for crypto investing. Big brand ETPs and easier retail access mean steady, lower friction inflows that can stabilize price action and attract capital that used to sit in dusty pension funds. Risk. Flows are slower but stickier. When sentiment turns, these investors don't sell as fast as day traders. Switching lanes to Solana execution tech, this is actually exciting for meme coin grinders. Jupiter launches Ultra V3 with Iris Router, Shadow Lane, and Predictive Execution Jupiter. The Solana liquidity aggregator dropped Ultra V3, an Iris Router that splits routing very finely. Shadow Lane private transaction landing, Predictive Execution, and a real-time slippage estimator. They claim 8 to 10 times lower fees, 34 times better MEV protection, and dramatically tighter realized slippage versus old routes. Ultra API and gasless support expand to meme coin pairs with a $10 minimum. This stack powers Jupiter's web, mobile, and pro tools. Basically a precision-guided missile for snipers who hate sandwich bots. Why it matters for crypto investing. Improved routing and MEV protection. Reduce slippage and front-running, making high-frequency meme coin snipes and limit order tactics more reliable and profitable. Risk. Performance claims need time in production. New routing can introduce unexpected edge cases in thin pools. Hold on to your ETH bags for this. Bitmine buys approximately 379,271 ETH, now one of the largest corporate ETH treasuries. Public miner turned treasury. Bitmine scooped up roughly 379,271 ETH, about $1.5 billion, across 3 waves, and now holds over 3 million ETH overall. The company is pivoting to an Ethereum treasury strategy, has big backers, and may issue equity to fund more accumulation. Corporate treasuries piling into ETH is the slow narrative that shifts entire supply dynamics if more firms follow suit. Why it matters for crypto investing. Large corporate accumulation removes liquid ETH from circulating supply and reinforces the institutional treasury narrative, potentially amplifying price pressure and ETF-related flows. Risk. If these players sell to fund other corporate needs, that concentration can turn into sudden supply dumps. Cloud drama time, because nothing says decentralized like everyone depending on one cloud provider. AWS Outage knocks out Coinbase Mobile, Robinhood, and a slew of apps. Cloud fragility on full display. An AWS US East 1 outage caused outages and errors across tons of apps. Coinbase Mobile, Robinhood, Snapchat, streaming services, and games all felt the pain, and trading front ends experienced partial downtime and order backlogs. Services recovered after a few hours. The cascade showed how centralized infrastructure failures can ripple into markets, even when the ledger itself is fine. For a few hours, traders faced stale UIs, orphan orders, and the kind of panic that makes people click buttons they regret. Why it matters for crypto investing. Centralized cloud outages create real execution and liquidity risks. Missed exits, delayed entries, and panic selling can amplify moves. Risk. Always expect single points of failure. Outages are the silent liquidity killer during squeezes. Cold storage horror story next. Don't be the retiree. 1.2 million XRP, about $3 million, stolen from a US investor traced into OTC and Wione channels. Likely unrecoverable. US retiree says his hardware wallet seed was imported into an app and his 1.2 million XRP, roughly $3 million, was emptied. Blockchain trackers followed the funds into Tron Rails and OTC networks tied to Wione Guarantee in Southeast Asia. Once crypto hits those OTC lanes, recovery is near impossible despite on-chain visibility. This is the brutal reminder that hardware wallets aren't magic if operational security is garbage. Why it matters for crypto investing. Custody failures are fast, and once funds enter OTC laundering channels, the chance of recovery is minimal. Big holders need airtight custody, rapid forensics, and legal support. Risk. Human error still beats tech. Safeguard seed phrases and vet any recovery apps. Finally, Solana price action to close. SOL steadies near $190 to $200 as ETF chatters, and meme coin flows pick up. SOL has been drifting toward 190, driven by ETF approval chatter for Solana products and renewed meme coin volatility on the chain, with analysts pointing to a double-bottom demand zone near $175 and some bullish technical setup. The bigger breakout levels are still up near $300 and all-time highs, but on-chain liquidity and meme coin momentum are giving SOL legs right now. With better execution stacks like Jupiter Ultra V3, the practical ability to trade Solana meme coin flows is improving. Why it matters for crypto investing. Faster settlement, concentrated meme coin liquidity, and nascent institutional products can fuel sharp, multi-leg rallies in SOL. So watching on-chain flows, liquidity depth, and routing quality matters for sniper plays. Risk. Meme coin liquidity can evaporate in one tweet. Leverage is a scalpel that can cut your wallets. All right, that's the wrap. Smash subscribe for daily melt-ups, breakdowns, and the occasional actual signal. That's Today in Crypto, where the gains are imaginary and the pain is real.